Good afternoon, everybody. Welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at Verified Investing. Now, interesting day today. Markets at one point were having a good little rally. They lost a lot of those gains towards the end of the day. Still a mixed bag, but coming off of such a massive sell-off yesterday, it certainly makes you think that the markets continue to be weak. What was the key catalyst to the selling today? It was the JOLTS report. The JOLTS is the job openings. How many job openings are in the U.S. right now? Well, I'll tell you this. From last month to this month, almost 500,000 less. Not because people are getting jobs, because companies are no longer advertising or hiring. That's what's going on here. So let's take a look at this chart. Well, first we'll go through the markets, then we'll look at the JOLTS data here. But basically what we have, the Dow up 40 points, NASDAQ down 40 points, S&P just fractionally negative. Oil took another hit, and yes, I did cover my short today on the USO with members of Smart Money Commodities, so congratulations, an over 10% gain in a week shorting that beautiful setup on oil. Gold today flat. And Bitcoin, after a little early weakness, has come back relatively well, trading just around the 58,000 level. Heat map-wise, NVIDIA struggling again, folks. So again, NVIDIA, after yesterday's unbelievably big fall, biggest market cap drop in history yesterday from NVIDIA, $279 billion erased just with that one stock. Apple's even negative today. Microsoft and Google are around the flat line. So again, big cap tech generally weaker, but a couple of them are around the flat line. If we go over here, you can see it's a spattering of red and green. So again, a mixed bag, just like the S&P and the NASDAQ and the Dow tell us, right? Kind of around the flat line. You can see the Dow is only, the S&P only down about 2 points now as it's coming back off of the lows. Now, back to the JOLTS data. We got to take a look at this, guys, because this is a big deal. All right, so here's your JOLTS data. And again, this is a chart showing it. I hope you guys can see. I know it's a white background. It might be a little tougher. But what we have in this situation is this was the most job openings up here. All right, so we had a lot of job openings up in this upper range. This was kind of the most almost historically, I believe. And what we saw is a slow grade lower. In fact, it started to speed up. And today's job openings came in at 7.67 million. Now, again, that still seems like a lot of job openings. And historically, it actually is still relatively high. In fact, you can see right over here, just before the Great Recession, or just before COVID checked at, we were just at these levels. So it wasn't a bad amount of job openings, but it's the velocity. This is really a big decline. Missing estimates by almost 500,000 jobs, or job openings. That is a big decline, and that's making the market very skittish going into tomorrow's ADP private sector number, which I believe is expected to come in around 145,000. Those are private jobs added. And then Friday's non-farm payrolls report, which will be out at 8:30 a.m. Eastern on Friday. I would say this, based on what we're seeing in the markets today, the markets are holding on by a thread. If we get a weak ADP number tomorrow at 8:15 a.m. Eastern time and another weak jobs report on Friday, this market could be in for another big down day, 2 to 3%. So just be aware, it's hanging on by a thread. We need to see strong jobs numbers that really put people's fears at ease, that we're not headed towards a recession right away, and then the markets might actually rally. But I'll tell you this, it is hanging on by a thread. There's your JOLTS number right over there. All right, let's get into some charts here. Let's see what we have on the data point. I have Tesla up here in just a second, but let's flip over and look at the S&P 500. If we flip over to the S&P, you can see late day little surge to the upside. So nice little surge here to the upside on the S&P. But intraday, there was your move up. This is where the JOLTS number came out right here, and then it traded the market, or forced the markets to move lower before this little end of day spike. This could be some short covering ahead of the ADP number, because again, if you're short and we get a strong number tomorrow, the markets could have an up 1 to 2% day. I don't think we'd get a 3% update on the ADP number, but certainly a 1% or plus number is possible for the data, or if that data comes in strong. Okay, looking at a couple other things here, guys. NVIDIA continues to be on the weaker side. Here's your intraday action on NVIDIA. It opened sharply lower, trading right into a level that I talked about this morning in the game plan. Right here, you can see the line right there. I actually bought this with the Apex Live Day Trading Room. We had a beautiful move up, taking $2.50 per share, just basically in 10 to 15 minutes of time. And you can see that NVIDIA actually went higher all the way up to just about 110 and then couldn't hold those gains and rolled over. Now, you did get a little bit of a bounce here right into the end of the day, but pretty minimal bounce, frankly. Again, you can see it traded this high in this last 10-minute candle of the day, and it's lost a majority of those gains as it's come back in. Not good showing for NVIDIA. Again, same thing. It needs a strong JOLTS number tomorrow, not a JOLTS number, excuse me, ADP private sector number tomorrow to really get a mojo and a bounce to the upside. Couple stocks that were in motion today. Celsius, a big drop here. This is actually getting very interesting in terms of a technical level for a swing trade. Look at this fall on Celsius, by the way, from $100 all the way back down, now trading at $32 and change. So we're talking about, give or take about a 65% drop in the stock just from May of this year. But look at what's coming up here on the charts. There's a big level right here, going back to support here, right through here. And then again, we are coming into this level right above 30 or right around $30. So I am eyeing this as an intriguing level. Maybe add more shares right in this range. I do have a small position already, but looking to really start to accumulate a little bit heavier should we get into this level. Let's take a look at a couple of these other charts here. Today, PagerDuty did take a beating early, but came back a little bit. Dick's Sporting Goods had a big drop on the day, but it also did recover. You can see right over there, right there, you can see it flushed all the way down here and then recovered to the upside. U.S. Steel had a big drop as well. Look at this drop on U.S. Steel, folks. A monster move to the downside, but this was another one that one of our traders caught in the live day trading room right off of this low. This was a 50% Fibonacci retrace, and it actually bounced nicely, but still, overall, down 17% on U.S. Steel today. As again, if it continues to fall, there will be some really good swing trading levels. Let's take a look at them right now. Let's see what we have. So the first level that jumps out to me on this stock is right down here at 22.65. It is a beautiful level right here, a gap fill. Look at this big gap right here. We closed here one day. We opened all the way up there. That creates a gap. When price gets filled, technically speaking, it has probability favoring a bounce. Buyers are generally coaxed in. So you're looking for a move down here on a swing trade basis to 22.65, and that could be an unbelievably good opportunity for a day trade. All right, let's look at a couple others. Tesla today having a strong day. Tesla, again, guys, one of the better performers today in the S&P 500, up 4% in a general flat to slightly negative market. It's creating what we call a wedge pattern in technical analysis, which is consolidation. If you break to the upside, your target level would very clearly be this gap fill right here, just below 250. If it breaks to the downside, you're probably headed down into this lower range right here around 175 or so. So wedge patterns in general, remember wedge patterns, it's tough to know which way they're going to break, but whichever way they break, there's usually a big move in that direction. So essentially it's a spring winding tighter and tighter and tighter, and then if you break here, you get a big move, or if you break to the downside, you get a big move. The question is, which way is it ultimately going to break? We know our upside level, we know our downside level, we trade it accordingly, but once the break point occurs. Okay, so that's what we have on that front here. I do want to go over the Bitcoin action today. If we flip over to Bitcoin, Bitcoin was lower early in the day and has come back and turned green. That's very, very good for Bitcoin, but it still stays below the pivot line, which is bearish right here, right? So it still favors that downside. But I like to see the price action today. It's a good showing on the chart of Bitcoin, but still overall a negative bias unless we confirm above the pivot line. Looking at gold today, gold again had a nice pullback. You had a little bit of technical support right in here. It bounced off of that and is flat to positive on the day. Obviously, the big move on gold is probably going to come on Friday's jobs report, right? That'll affect the U.S. dollar, the 10-year yield, all of these different things. Speaking of the 10-year yield, we have to talk about the yield curve, guys. All right, yield curve is essentially now zero across the board, and this is the yield curve. All right, so you have the 2-year is the pink line, right? So this pink line. The 10-year is the white line. So what we've seen for the longest time is an inversion of the yield curve. What does that mean? Well, it means the 2-year was paying out more than the 10-year, which again is lopsided because generally the longer you lock your money up, the more interest you demand, right? If you tell me, hey, you can give me X amount of dollars, but you can't get them back for 10 years, or you can give me X amount of dollars and I'll give it back to you in 2 years, Well, if I'm going to give it to you for 10 years, I expect a higher interest rate because I don't have that money to do other things. So the 10-year in general is going to be higher than the 2-year. When it inverts, the 2-year is higher than the 10-year. It's been so for the longest in history. But what's going on here? We're starting to see the uninversion take place. We're basically back to lockstep where the 2 and the 10 are paying the same amount of interest, and ultimately what usually happens, eventually the 10-year goes like this and the 2-year goes below it, uninverting the yield curve. The reason why you watch this is historically, if you look at the inversion, it's the recessions occur when the yield curve uninverts. All right, so everyone, going back a couple years, when the inversion occurred, everyone was like, oh my goodness, we're inverted, this is going to bring on a recession. No, not really. The inversion doesn't bring on the yield curve. It's when it uninverts that it triggers, or it doesn't trigger it necessarily, right? It's not the cause of the recession. It's an outcome of a coming recession is the uninversion, essentially. All right, so again, watch that. That is a good indicator that could be telling us, if we see this uninversion continue, that we could be seeing a recession in usually about 3 to 6 months after is when you fall into that recession per the uninversion. Looking at silver's chart, let's take a look right here. In fact, I'll bring up my other chart so we can take a look on that front here and look at our charts here. Silver today, a small little bounce today. You have had a decent pullback on silver. I have this general parallel right here that I've been following. This is major support down here around 26 to 25.50. Resistance remains around 29.50. But right now you're trading at the midpoint, which gives you a little minor level of support and a potential small bounce. Oil today, guys, holy cow. Look at this drop on oil. So oil is now down, trading at, get this, guys, we are now trading at below $69 a barrel. Now, for those of us that fill up at the gas station, this is good news, right? This is lower. But it's not so good news when you look at why oil is falling. All right, oil's not falling because OPEC is threatening not to make the additional supply on the market, right? So that's what happened this morning. We saw this little bit of a pop-up in oil because OPEC was trying to support the price of oil, saying, hey, we might not add the additional barrels on the market that we were promising to add. And so oil initially spiked up. It couldn't even hold that. And I did a video on this today on the website on verifiedinvesting.com. But essentially what I said is that whatever OPEC says, it doesn't matter. Honestly, whatever OPEC does, it doesn't matter. What matters, what the bigger factor is how much the U.S. is flying into recession or slowdown and the rest of the world. So it doesn't matter whether there's an extra 100,000 barrels or even 1 million barrels on the market a day. If the U.S. goes into recession, so much oil will not be used that it doesn't matter what OPEC does. Honestly, it just doesn't. And so that tells us that we're probably going lower. Now, I did take my money on my short because honestly, we shorted right here. A week later, we made over 10%. I'm very happy with that. Could it go a little bit lower down to here? Yeah, it could, and it probably will. Then I expect a retrace to the scene of the crime, and I'm going to look to re-short right here for that next leg lower. So this is a classic chart setup. You have the multiple hits of a trend line, finally the breakdown as probability tells us, and down we go there. All right, lastly, natural gas. Take a look at this, guys. This is kind of a cool chart. We can see very clearly I have my support and resistance lines, right? So we have this line right here, very clearly, right here, right here. Today, look at the high on natural gas right there, and it got rejected. Classic technical analysis, classic resistance. All right, now, again, is there a trade here? No, there's not really. It's trading in a zone, in a range here. Range trading I don't like because it doesn't give me enough reward. I want to get the bigger moves one way or the other. When you're just trading like this, there's too much risk that it does something that I don't know. So I want to see the big move up into double top resistance where I have a major level and then the bigger pullback. I want to know there's a bigger move to that if I'm going to put my money on the line. All right, guys, hope this has been informative. I got to get back to trading in the after hours and see what the earnings are here in the after hours. You guys have a great rest of your day. I'll be back tomorrow with the game plan. Take care.